All right, so Bitcoin, huh? Looks like you're trying to figure out how to handle things if things go south, if there's a crash.
Smart thinking.
Yeah, especially with how much buzz there is around it right now, and a lot of anxiety, I think, too.
Yeah.
So we're going to dive into this article. It's called Preparing for a Bitcoin Crash: Insights and Strategies,
Good.
and see what we can uncover here.
Sounds good.
Yeah.
I think it's definitely wise to be prepared because, well, Bitcoin has a history, right?
Oh,
With
yeah.
these dramatic rises and falls, and it can really feel like a roller coaster
Yeah.
sometimes when you're in it.
Oh, yeah. It's a wild ride.
Yeah.
I mean, just look at some of these examples that the article even points out. Like back in March 2020, 50% plunge in just 2 months.
Yeah.
That's crazy.
Yeah.
And then there was that massive 84% drop between 2017 and 2018. And then remember May 2021 when Bitcoin hit $1 trillion market cap?
Huge.
And then bam, down 53%. It's a lot.
Yeah. It's enough to make anyone dizzy.
And the thing is, it's not just like random.
Yeah.
Like this isn't just random chaos.
Right.
These wild swings, they're actually part of a pattern,
Oh, yeah.
a recurring cycle.
Interesting.
It seems to be like built into Bitcoin's DNA almost.
Yeah. Yeah.
So understanding this is crucial for anyone thinking about investing in it.
Absolutely. So,
Yeah.
Knowing that these crashes, it's almost like a regular thing. Like,
Yeah.
what does that mean for us right now?
Right.
The article mentioned Bitcoin approaching this like critical point.
Right. Yeah. That infamous $100,000 mark.
Okay.
It's like this major hurdle
Okay.
Bitcoin has to clear, you know?
I bet.
And right now it's dancing around 99,000, which the article calls a support level.
Okay.
You can think of it like a safety net,
Mm-hmm.
a point where buyers are likely to step in
Okay.
and prevent the price from falling further.
So if Bitcoin breaks through that $100,000 ceiling, that's a good sign.
It could be.
Yeah, potentially it could signal a surge in confidence.
Right.
And really drive that price even higher.
Oh.
But, and this is where the risk comes in.
Okay,
If
got
it
it.
fails to break through
Yeah.
and instead drops below that 99,000 safety net,
Mm-hmm.
things could get, well,
Interesting.
Yeah.
Interesting good or interesting bad?
the article paints a pretty vivid picture
Okay.
of what could happen.
Right.
It suggests that if that support level breaks,
Mm-hmm.
Bitcoin could tumble all the way down to 67,000.
Wow.
That's a potential 44% loss.
That's a lot.
Yeah.
Yeah, so not exactly a walk in the park.
No.
But there's also that potential for those huge rewards.
Yeah.
And I think that's what keeps people coming back for more.
Absolutely.
Right? The article mentions if Bitcoin rallies to 110,000, someone who bought in at 95,000,
Yeah.
they'd be sitting on a 16% profit.
That's true.
Yeah.
But that potential upside,
Yeah.
it has to be balanced against the very real possibility
Mm-hmm.
of some significant losses.
Yeah.
And as we've seen from Bitcoin's history,
Yeah.
a 50% drop
Mm-hmm.
or even more.
Yeah.
It's not out of the question.
It's a high stakes game.
It is.
And here's something I think that gets overlooked a lot.
What's that?
A Bitcoin crash, it doesn't just affect people who own Bitcoin.
You're absolutely right.
Right.
Yeah.
Like it impacts other things.
The ripple effects can be felt
Yeah.
throughout the market,
Yeah.
especially by companies
Yeah.
that have tied their fortunes to Bitcoin.
Yeah.
The article specifically highlights
Okay.
2 companies,
Okay.
MicroStrategy
Uh-huh.
and Coinbase.
Okay, so let's break those down.
Right.
MicroStrategy,
Yeah.
they're the ones who went all in on Bitcoin, right?
Exactly.
So-
They hold billions
Yeah.
of dollars worth of Bitcoin.
Crazy.
So every $10,000 drop translates to a $540 million hit for them.
Wow.
Imagine the pressure. It raises
No.
questions about their long-term stability,
Right.
and that can spook investors.
Yeah, absolutely.
Yeah.
Wow. That's a lot of money riding on Bitcoin's performance.
It is.
And then there's Coinbase.
Yeah.
What's their story?
So Coinbase, they're a major cryptocurrency exchange.
Okay.
So think of them like a stock market.
Okay.
But for crypto,
Okay, got it.
their business is directly tied
Mm-hmm.
to the volume of crypto trading.
Okay.
So when Bitcoin crashes,
Yeah.
trading activity drops,
Mm-hmm.
their stock usually takes a nosedive.
Oh, wow.
Yeah, their fate is pretty much intertwined.
So it's like a domino effect?
Yeah.
Bitcoin stumbles,
Mhm.
companies like MicroStrategy, Coinbase,
Yeah.
they could topple right along with it.
Yeah.
Not a pretty picture.
It highlights how important it is
Yeah.
to consider those broader market implications when you're thinking about Bitcoin.
Sure.
Not just the price of the coin itself.
The whole picture.
Exactly.
Yeah, for sure. Okay, so we've laid out some risks here.
Yeah.
And believe me, they're real.
They are.
But you wouldn't be deep diving into this if you weren't,
right,
up for a challenge, right?
Yeah.
So let's kind of shift gears a little bit here.
Okay.
And talk about what you can actually do
right.
to navigate this potentially turbulent Bitcoin sea, right? Mm-hmm. What strategies does this article offer?
Well, it starts off with some pretty bold moves.
Okay.
Like shorting vulnerable stocks.
Okay.
Specifically MicroStrategy and Coinbase.
Okay.
Yeah.
Hold on. Shorting.
Yeah.
That's like betting against a stock, right?
Yeah. Essentially, it's super risky.
It can be. Yeah.
Okay.
It's definitely not for the faint of heart.
Right.
But essentially, you're borrowing shares of a stock that you think is going to go down in price.
Okay.
Selling them. Yeah.
Then hoping to buy them back at a lower price later to return to the lender.
Got it.
And then your profit comes from that difference.
So if you think Bitcoin is going to crash, and those companies we talked about are tied to its performance, you could theoretically make money as their stock prices fall?
Exactly.
Okay.
But the article is quick to point out,
this
is a high-risk, high-reward tactic.
Yeah.
Crypto moves fast, and those overnight swings can really hurt.
Oh, for sure.
If you're on the wrong side of the bet.
Right. Yeah, that makes sense. I'm already getting nervous just thinking about it.
Yeah.
So is there a way to maybe profit from a downturn without that level of risk?
Yeah, so that's where inverse ETFs come into play.
Okay.
The article specifically mentions one with a ticker symbol BITI.
Okay, full disclosure, I'm not a finance whiz.
Okay.
So break down these inverse ETFs like I'm 5 years old.
Okay. Imagine a seesaw.
Okay.
On one side, you've got Bitcoin going up and down.
Okay.
On the other side, you've got BTI moving in the opposite direction.
Okay.
So if Bitcoin goes down, BTI goes up.
Oh, okay. So it's like a mirror image of Bitcoin's performance. Yeah. I don't have to actually short anything.
You got it.
Okay. That sounds much more my speed.
Yeah.
So, but what about trying to time the market?
Right.
Buy low, sell high.
Yeah, it's tempting.
Is that even possible with something as volatile as Bitcoin?
It's tempting, right. And the article does dive into that.
Okay.
Into this idea of studying those historical price patterns and, those key support and resistance levels.
Right.
What we talked about earlier.
So it's like trying to read the tea leaves of the market.
Kind of.
To predict when to jump in and out.
Yeah, it's like, kind of, but it's far from an exact science.
Right.
It requires a lot of research. A deep understanding of the market trends and a healthy dose of caution.
Yeah.
The article makes it very clear that timing the market
is
one of the most challenging strategies out there.
Okay, so maybe not for the casual investor.
Right.
So, but what about people like me who aren't looking to make a quick buck?
Right.
But are more interested in the long game?
Yeah.
What does the article recommend for those of us who want to hold on to Bitcoin for the long haul?
That's a great question.
Yeah.
And the article does shift gears to address exactly that.
Okay.
It emphasizes the power of dollar cost averaging.
Dollar cost averaging. Okay.
So instead of trying to time the market perfectly, you invest a set amount of money at regular intervals.
Okay.
No matter what the price is doing.
So like if I decided I'm going to invest $50 every week.
Yep.
I just do that.
That's the idea.
Consistently, whether Bitcoin's soaring or plummeting.
Yeah, that way you're automatically buying more Bitcoin when the price is low.
Right.
Less when it's high.
Gotcha.
Over time.
Yeah.
It smooths out those price fluctuations.
Okay.
Potentially lowers your average cost.
It takes the emotion out of it.
Yeah.
No more frantically checking the price every 5 minutes.
Right.
Okay.
Yeah, exactly. And just as important.
Okay.
The article stresses diversification.
Okay.
Don't put all your eggs in one basket.
Yeah, right.
Especially a basket as wobbly as Bitcoin.
Yeah, that's good advice.
Yeah.
So branching out into other cryptocurrencies, maybe some that are a little less volatile.
Right. There are plenty of options out there.
Yeah.
With different levels of risk and potential.
Right.
The article also mentions exploring those more traditional investments outside of crypto.
Right.
To spread things out even more.
Yeah, this is making me think back to that risk assessment.
Right.
Like, it's all about understanding
how much you can comfortably afford to lose, right?
Absolutely.
Yeah.
The article specifically cautions against over-leveraging, which means borrowing money to invest.
Right.
Which, while it can amplify gains, it can also magnify losses, especially in a market as unpredictable as crypto.
Right. And if there's one thing we've learned from Bitcoin's history, it's that those losses can be pretty dramatic.
Right. It's a wild ride.
Yeah.
It's not for everyone.
For sure.
The article emphasizes knowing your own risk tolerance and not getting in over your head.
Okay, so we've covered the potential pitfalls, the strategies for navigating all those treacherous waters, and the kind of mindset you need to have for the long haul. I feel like we've really unpacked this article.
We've explored a lot, yeah. It's important to acknowledge, as the article does, none of us have a crystal ball.
Right. Yeah, we can analyze charts, study all the historical trends.
Right. We can talk strategies all day long.
Yep.
But Bitcoin's still a bit of a mystery, isn't it?
Absolutely.
It's that unpredictability that makes it both exciting and terrifying.
Right. And the article doesn't pretend to have all the answers.
Right.
It acknowledges that, Bitcoin's future is still very much uncertain.
Yeah. But the key takeaway for me is understanding Bitcoin's cyclical nature, those booms and busts, and having a plan in place can really empower you as an investor.
Totally.
Whether you're looking to ride the waves for short-term gains or weather the storms for the long-term growth.
Yeah, I completely agree.
Knowledge is power, especially in a space as complex and as dynamic as this.
For sure.
Which brings me to a question that the article kind of sparked for me.
Okay.
And it's one that, you should consider.
Yeah.
Even if history repeats itself and Bitcoin recovers from a crash, let's say, the landscape could be completely different.
It could, yeah.
Right.
Yeah.
What are the factors beyond just price that could shape Bitcoin's future?
That is a great question to ponder.
Yeah.
Think about things like government regulations.
Oh, yeah.
Adoption by mainstream institutions, technological advancements.
Yeah.
All these things could play a huge role in determining where Bitcoin goes from here.
It's a fascinating puzzle.
It is.
And, this deep dive has given you some solid pieces to start putting it together.
Yeah.
But remember, this is just the beginning.
Right.
The world of Bitcoin is constantly evolving.
Keep learning.
Yeah.
Keep exploring.
Yeah.
Don't be afraid to ask questions.
Ask questions.
That's how you stay ahead of the curve.
Couldn't agree more.
Yeah.
Thanks for joining us on this deep dive into the world of Bitcoin.
Absolutely.
Until next time, stay curious.
Yes.
Keep exploring.